You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/the Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Good to hear that music again. It has been too long. My name is Mark Longo. Welcome back to the Option Block, usually your bi-weekly source. This past week, not so much. I, of course, was called away to do some panel business last Thursday. And then, of course, Monday was the holiday, so no blame can fall on us there. But still, you guys have been sans Option Block for the better part of the past week. So we're getting back into it for you. Get you right back on the old horse. And joining me to help me do just that, I got the usual cast of colorful characters. Starting off, let's just spin the dial. Who knows where we'll land or what the heck's even going on where we go. Let's go all the way out, far, far away to a little tiny hamlet known as Maine, where one guy searches for options and it drives all the volume, makes Maine the top options destination for Google in the country. Yes, of course, I'm talking about the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir.
It's good to be back. It feels like it's been a while.
Yeah, it does, doesn't it?
Because we were in Chicago, and that was only a couple weeks ago.
Yeah, it seemed like I just saw you a few weeks ago, though.
I know, but it was enjoyable. I saw the lovely Miss Jean, and then I was gone again.
You were in, you were out. We had a great dinner, and then you were gone.
Yeah, we did. Somehow you got Sebastian to pay for your dinner.
I'm clever that way, and those are always the most delicious of dinners because they are on the greasy. It could be just a bowl of oatmeal, but if Sebastian buys it for you, it just tastes that much better.
It does. It actually, it's hard to get a better meal than that.
I can encourage all people out there, if they haven't done it yet, go hit up the meatball for a free meal and then see how good it tastes. You'll be surprised how delicious that bowl of oatmeal can be. Or in this case, steak and chicken. It was also quite good. And Mr. Uncle Mike, you missed the big meal palooza, but we missed you as well. It's been a week. How are things going in the land of St. Charles, sir?
All is well. Excited to dive into this show and get after it. I think that with all the events that are going on, I think that we'll have earnings along with us. A lot to talk about today.
There is a fair bit happening. The market gods are smiling on us in that aspect. So let's get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we talk about what the heck's trading out there, what's lighting it up. A bit of a weird day, bit of a weird week. We saw last week, it seemed like the worm had turned. Trade war concerns were in the rearview mirror. All was right with the world. We were rally ho, rally ho. Coming into this week, kicking it off, not so much. Sell off, sell off. Then today looked like, rally ho again. And then now it seems like maybe the worm turning a little bit intraday there as well. Coming into showtime right now, we're seeing kind of a bit of a mixed bag. NASDAQ up slightly, up about a third of a handle, or sorry, third of a percent, I should say. S&P slightly down, ever so slightly, and the Dow off about 0.25%. So kind of a bit of a Goldilocks market out there. Again, pick your poison. That's where you're going to land. And looking at things out there from a volatility perspective, our old friend VIX Cash has had a turbulent week, getting down into, how low did we get over? It got about 17 and a quarter almost before spiking back up there to almost 22 back on Wednesday, and then coming back off again. It's now about 19 and three quarters or so, up slightly, ever so slightly on the day. As again, we have a bit of a mixed bag out there, and all sorts of fun stuff popping off, but I haven't had a chance to really check in with either of them in a while, so let's give them a chance to go first. I'm going to spin the wheel. I'm going to go back the other way, opposite from the way I started. Mr. Uncle Mike, we'll start with you, sir. It's been a week. It's been a crazy week. What's catching your eye out there, sir?
Well, a couple things. The first thing is the Apple around the 150 mark. With Apple at that level, curious to see the direction with which it goes, but it does appear to be holding the 150 mark for a while now. So once again, it's a longer-term holding for our strategic night fund, and I don't think it's necessarily. Once again, the innovation index is not there for me. But if you are looking to get into a good stock and you are not in it and it fits your financial needs and objectives, Apple might be one to consider possibly selling some puts on, especially at these levels. The fact that it was in the 230s a few months ago and it's at 150 right now, and it's not exactly a fly-by-night startup company. I think it's something to consider personally. So that's something that I continue to look at, as well as just monitor in our strategic night holdings. A couple other things that I'm monitoring at this point. We're right around the area of the 2018 open for the year on the S&P 500. We're still below it technically, so we're still down by a couple of points, not a lot, but a few points from the 2018 open of the SPX, but we continue to go there. And so I do think that just the fact that it's a key level, it is somewhat of a sense of resistance. We started this year at 2,500 approximately, and the fact that we've had a really nice January overall, but of course you have to take it with a grain of salt with what's happened over the last few months of 2018. So that's another thing with which I'm watching right now. We have a lot of things going on the macro front in terms of just the kind of the big three at this point. The government shutdown, the deal with China that may or may not happen, as well as interest rates. I think on the macro front, the deal with China is the main thing at this point. When there was an announcement earlier this week, I should say, saying that they have delayed talks with China, or there was a meeting canceled, I believe. Whenever there's negative news that comes out like that, we have pulled back in the S&P 500. So I think that's something that definitely needs to be respected. So I think that with that coming out, depending on how the market reacts to how the earnings are, we'll have a lot of things happening over the course of these next few weeks. And we won't have any problem finding stuff to talk about on this show, that's for sure.
That is indeed the case, sir. Yes, we are indeed hot and heavy in earnings season. We'll break all that down in a little bit, but first, let me go out to the Rock Lobster himself, see what's been catching his eye over the tumultuous past week. Mr. Rock Lobster, what's catching your eye? What's catching the eye of the crazies over there in the pit chat over the past week, sir?
Really just the weird volatility curve, like VIX, like cash futures. It's like it's very, let's just say it's very in flux. And I think it's because you've got this overhang of the trade war overhang thing. And it's making things very, it's where I was, so the easy thing to say is everything is much more of a knife edge than normal. So it's like, okay, trade war comes out and we launch. So it's hard we really haven't gotten volatility to come down. It's come down. It's not 35 anymore, but it still has a reason to hang out here. So that's the easiest answer I can give is there's a lot of the market. It's a very flat curve overall with VIX cash, jumping up, but there's 20 cents that separates all the futures, the VIX futures, and VIX cash is 20. So it's almost like it wants to go, like the market wants to sell off, but it doesn't. There's no reason. So I think, but on the flip side, I think there's a lot of expectation for like a big move either way. Which way, I don't know, but the curve is kind of saying that. So it's just kind of, okay, we're waiting to see until something big happens. It's kind of like, like the cop in the donut shop. Like the cop goes to the donut shop, has a cup of coffee, and everything's kind of cool. But at a moment's notice, thinks, somebody robs the store across the street and he's got to run in and go do something, So where, not much is going on, but we could instantly have something go on. And I think there's that expectation. That's why the futures curve is so, it's jigging around in one point, up and down, and that's what we got. So I think it's a strange trading environment, to be honest. I think Tussauds right. You got to look at, like, I would say, more long-term trades. Look at long-term opportunities, stocks that are cheaper, and trying to make it easier. Or I'm trying to, by going long-term, you're taking a lot of the short-term noise out of a lot of the gyrations.
Yeah, it has been kind of a fascinating thing to watch the VIX futures curve over the last couple of weeks kind of just remain glued there for quite a while to, we were talking about on the last vol views. I think you went at the time on Friday, if you went all the way from, month 2 all the way out to pretty much almost August, they were kind of glued around that 1860 to 19 levels, pretty flat across the board, which is, you're right, a little eerie when you look at that, because that's telling you the market's kind of flipping a coin. They don't know what the hell's going on for the near-term future. Longer term, we got a saner heads prevailed, but in that 6 or so month period, there's not a lot of insight or foresight really coming out of that curve, which is a little bit surprising. Speaking of surprising, let's see if things are surprising us in terms of what's lighting it up today. Like I mentioned, an active day as the worm is turning yet again. Looking at what is the most active out there right now. Uncle Mike talked about Apple. Apple not feeling the love out there from a options volume perspective today. Number 1 is actually GE, number 1 with a bullet. GE, almost 400,000 contracts on the tape. Looks like it's split fairly evenly, calls over puts, about 50-50 roughly. So no big bias going on out there. Micron, number 2, about 240,000 contracts, slightly biased to the calls, 56%. At Facebook, number 3, about 25,000, I should say. 25 million, that would be quite the day. 224,000 contracts on the tape. Again, pretty much even calls to puts, which is kind of interesting. Number 4 is Intel. We'll get to them in a little bit there as well. They have earnings after the bell out there. It seems like a pretty heavy call bias going up out there today. 204,000 contracts on the tape for our number 4 spot. 78% of those in the call side of things. Number 5, good old NVIDIA, 175,000 contracts on the tape. About 70% on the call side. And then Apple, all the way down at number 6. That's a rare thing with only 167,000 contracts. So the fact that Apple's flirting with 150 again is kind of a bit of a shoulder shrug, it seems like, for the market right now. They're not really trading it up the way they normally would when we first started threatening these levels. And yeah, about 57% on the call side. So slightly biased to the calls, but not a ton. Then we got AMD, number 7 there with 165,000. Number 8, Netflix, 148,000. Number 9, we've got, Square, 131,000. Number 10, Good old Tesla always manages to squeeze its way into the top 10. $1.29 on the tape there, 44% only for the call. So a little bit of a put bias going on out there in Tesla. In terms of the big products, the indices, let's see what's lighting stuff up out there in terms of volume. VIX, a little bit more than 250,000 contracts on the board, 260 right now with about 560,000 at the ADV. So a little bit light on the ADV, but trading a decent amount. SPY has about 1.2 million contracts on the tape, about showtime here. ADV is a robust 3.5 million contracts. SPX, almost 500,000 on the tape. ADV out there, about 1.7 million right now. And the Qs have just a tick under 400,000 contracts on the tape. ADV, about 890,000 contracts. In terms of other things that are lighting it up, as Uncle Mike alluded to, it is earnings season. A lot of things popping off. Remember, you can head on over to theoptionsinsider.com. Get those great earnings move reports. I remember I've teased a new version of that site coming soon. It's been a little bit delayed, as these things always are. There's always tweaks to be made behind the scenes and upgrades, and we want to move this and change this. So it's coming soon, I promise you. You'll see a brand spanking new version of the Options Insider. So if the old one is creaking for you, don't worry. This new one's coming. Stay tuned. But you can find the reports there, or, of course, at ORATS, ORATS.com. They have a brand new site over there as well. They're copying us over there at ORATS. New year, new look out there. Let's see what's popping off. The earnings move reports here for this week. Of course, before the bell today, we had Southwest, we had JetBlue, and a few other big names out there, American Airlines as well. After the bell, Intel, my old stomping grounds out there, good old S-Bucks as well. You got E-Trade, a lot of big names popping off after the bell. Let's see what the earnings move reports are pricing in so far for the names that have reported. JetBlue, they closed 17. Their stock price, I should say, was at about $17.37 going into this report. They were pricing in about 80 cents. In the past, they had moved roughly about that level, about 86 cents, so not that far off what they had priced in the past. And turns out the actual move was they priced in was about 70 cents. And let's see here. This is not the move report. This is the earnings reports. They were pricing in. Let's go to the move results report and see how these things are faring. Here we go. Yeah, the JetBlue report here. They were at 17.25 going into the announcement. The actual time of this report, the stock price was about $18.20, so it had rallied quite a bit, about $1. The actual move was about 94 cents. They were pricing in, like I said, 80 cents, so exceeding it a little bit to the upside there. Not a ton. American Airlines, they were 31.65 going into the report. They were pricing in a $1.87, and they moved to $1.86. That might be one of the more accurate straddles I've seen out there in some time. So pretty much exactly what the market was pricing in is what American Airlines delivered. Again, at the time of this report, things can change intraday, obviously. Let's look here at good old Xilinx, another old name kind of getting hot again. Xilinx, they were 89.5 coming into their report. They were pricing in, let's see here. They were pricing in $5, pretty much $5 even. They moved $12.31, so outperforming their to the upside, actually. Rally ho mode out there in Xilinx. So apparently the market liking what it's seeing out there in Xilinx. Again, you guys can catch all this stuff for yourself over there on the optionsinsider.com. Looking at Love, a.k.a. Southwest, what they were pricing in before the report here. They were pricing in, the stock was about $17.40. They were pricing in 80 cents. So, actually, I'm sorry, that's JetBlue. It's 50.5 for Southwest, and they were pricing in $2.50 out there. And then in the past, they moved a little bit more than $2, about $2.07. So not exactly that far away, but a little bit more, pricing in a little bit more than they've seen in the past. If you're intrigued by Southwest or all these other names, there's hundreds of tickers here. Spend hours going through them all. Instead, head on over to theoptionsinsider.com. You can see it for yourself, what they've priced in the past quarter one, same quarter, over the calendar year, you name it. It's all in there, broken down by category for you. We have to keep on rolling, though. It's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
everybody. Welcome to the Odd Block, the portion of the show where we get funky, we get wild, we get crazy. Sometimes I drag the Rock Lobster down the rabbit hole with me. Let's see if he's willing to play along today. What do we got here? Our Eye of Sauron, like Roz from Monsters, Inc. We're watching, always watching, listeners. And on a day like today, we like to have some weird paper. Why not? Let's do it. It is the Odd Block, after all. So we're going to kick things off in our old favorite, Alien versus Predator. No, this is Avon products, ticker symbol AVP. Maybe after that movie came out, that series of movies, maybe they wanted to reconsider that ticker symbol. Not exactly the best cinematic series of all time, but a fun ticker nonetheless. AVP, of course, ticker symbol Avon products. Today, right now, they're trading a whopping, if you want your resident cheapie, we got it here for you. They're trading a whopping $1.94. They're up, 1 cent on the day today. So a big year here, I should say a big move here for Avon. Looking back over the past year, let's see what they've kind of been up to. A year ago, beginning of the year last year, they're trading right around $2.40. So they were a little bit higher than they are right now. In the madness, actually, of February, they actually looked pretty good. And like everyone else was kind of selling off in February into March, and Avon was rallying. They got up to $2.85 on February 20th. They hit their threatened 3 several times throughout March. So they were looking pretty good when pretty much the rest of the market was looking topsy-turvy. Then they took it on the chin later on in the year. By about June, summertime, they were down to $1.50. So they cut pretty much in half. And then rallying again to $2.50. So this name has had a very tumultuous year, moving 20, 30-odd% at a clip over a couple of month period here or there. So interesting stuff. Let's see what was catching our eye out here in AVP today. Looks like we have a bit of some long-term call love, pretty meaty call love at that. We got the Jan 20, so Jan 2020, $1 calls, listeners, for $1.07, 10,000 times, going up for $1.07. Like I said, the market at the time was 95 cents at $1.10. I'm gonna go out on a limb and say they probably bought these because A, it was opening, so there's no OI there, and B, it'd be hard in a name like this that doesn't really do a lot of paper to write those for $1.07. If you did, you got a good broker. More power to you. I don't see a stock leg, so it didn't go up as a buy right. So yeah, opening $1.07 call paper. So effectively, Mr. Rock Lobster, it seems like, if this execution is to be believed, they're effectively coming in and saying, hey, we want this bad boy. We want 10,000 of these calls for $2.07 effectively in the stock. This is an interesting play. You know, good thing the Viceroy isn't here, because I think he would take a lot of umbrage at the notion of spending $1 on a stock that's worth $1.94 on an option that can go away in about a year. But at the very least, they're doing it with a meteor option, so they're really only risking, about 13 or so cents on this bad boy. That's all. The rest of it is all intrinsic, so that at least won't erode. But I'm curious, so let's start there. A, your thoughts on this use case of options going out a year. This is effectively stock replacement on this bad boy. So what are your thoughts on stock replacement on a $1 stock, or I should say a $2 stock? And then also, in particular, this particular bit of strategy. What are your thoughts, sir?
Are they buying twice as much stock? That's my first thought. I guess they don't like one, so they're going to buy two. Whatever happened to the Avon lady?
I those days are all gone. You don't really see that much anymore. Or the Mary Kay pink car going around. You don't see much of that either.
I guess the Avon lady is gone. Can we even say Avon lady anymore?
I think that's acceptable. They were mostly ladies. I think that's allowed, sir. I'll allow it.
Okay, so I have no clue. I guess you know what? They should have sold out to Cody when they had the chance 4 or 5 years ago for a lot more. But all I think of this is somebody just wants to, they want to buy 1 million shares of stock, it looks like, and they don't want to spend $2 million for it. They just want to spend $1 million. So $1.7 million, and we just watch it and watch what happens. I guess maybe the Avon lady's due for a turnaround.
I guess they don't want to tie up the capital. But I mean, on the flip side, you could argue, of course, that you can buy these stocks on margin, so you could effectively buy the stock at the outlay point of about where he's paying for these options. Of course, that would be a lot of margin to tie up, but still, it's one of these weird ones. It's a subjective thing. It's a use case. We've seen it before. Maybe not on a stock this cheap. You don't see a lot of stock replacements on sub $2 names, which is why it kind of came on our radar. Also, it's one of the biggest prints of the day, ironically, on a very active day. Avon taking the cake here. Let's see what else we've got. As you guys weigh in on this one. What do you think about trading deep in the money calls 10,000 times on a $2 stock? Let us know. I'm sure you have thoughts. Let's keep on rolling. Yeah, we got more cheapies coming on. They're not quite as cheap. This is comparatively extravagant and expensive by way of comparison here. We've got SunPower Corp, ticker symbol SPWR. I'm going to go out on a limb and say they are a solar energy company. Just guessing. They are trading today $5.44, up about a quarter. This is the name that over the past year, let's see what they've been up to. They've kind of been rocking and rolling a bit too, as you might imagine. A bit of a volatile segment, the solar energy segment. A year ago, they were trading $7.77, so much higher than they are right now. And then they kind of vacillated all over the place, got up to nearly $10, $9.77 in April. And then they kind of vacillated right back down to about $7.86 again back in June. So they kind of been floating around a couple of handles at a clip over a couple of month period as well. So topsy-turvy. And then they kind of looks like they began a volatile but ending trajectory to the downside over the subsequent 6 or so months, breaking 7 and then breaking 6 in November or so, and then selling off aggressively on Christmas Eve, actually, down to 460. So something hit them pretty hard right around Christmas Eve, and then coming right back up here since then. They've kind of been on a bit of a run ever since. So they've rallied about 80 cents in that intervening month or so. So, yeah, exactly a month. So, yeah, interesting stuff here in another tumultuous name. Let's see what was lighting up, what caught our eye of Sauron out here. Looks like it's your old friend, Mr. Rock Lobster. Looks like it may indeed be the old line in the sand puts to the tune of the March 5s. Lighting it up, again, 10,000. 10,000 is the magic print today. That's the big print in the market. 10,000 times for 31 cents, crushing the bid all 10,000 times. These things were 31 cents at 33. Surprisingly tight for a name that doesn't trade a ton of volume, only 2 cents wide. So again, it could have been someone parking that out there and they hit that. But either way, 10,000 times on the bid. Looks like no stock, at least apparently with this one. This is opening as well, so no OI to speak of on this strike. Earnings are the 14th, so there is an earnings cycle baked into this one as well. Earnings February 14th, I should say, after the bell. So bit of an interesting line in the sand, perhaps, Mr. Rock Lobster, drawing it 10,000 times here at the 5 strike, a strike that they have broken through and about a month ago, but not a ton, and getting 31 cents. So if they end up getting it, they get the stock 470 or so, which is about a dime off that low. So not the worst price there, or not the worst level. And also there is a little bit of earnings juice factored in as well. So what are your thoughts here? Is this a line in the sand, you think, Mr. Rock Lobster, or you think there's some skullduggery going on? They're actually buying these bad boys. And then B, what do you think about that line in the sand there at around 470 in March?
I think this is the green wet dream play, where they like their solar power. They want 5% until March, and it doesn't look like a bad trade at all. I think, if you want to get some, the stock's kind of already beaten down a little bit. You want to pick up, it's certainly a lot cheaper than Tesla, and so I think from that point of view, it's a good way to get long the company if you want to. I mean, at worst comes to worst, you pick up the juice, and that's what you got. I mean, it was a $10 stock, but like all solar power companies, they always have that. They just suffer terribly.
They just suffer. I like that. They just suffer.
I mean, you had that company that Musk, Solar City, he came up with, and then, First Solar has been the only one that has really been able to maintain, but the stock really hasn't gone anywhere in 5 or 6 years. Everybody's waiting for it to kind of fall apart, but it looks like, the solar powered companies are kind of making a little move. So I would just say on that score that it's a 5% play till March, and that's a 2-month carry. It's not terrible. It will probably do better than the market if you just can pocket that money. So I think that is a reasonable line in the sand trade, I would say.
Reasonable. I concur. That's not a bad level there. Get a little bit of earnings juice. They are trading through the earnings cycle, which can always be tumultuous, particularly in these cheapy names. But yeah, level-wise, if they are looking at getting the stock at that level, which it does seem like they probably are, then not the worst thing we've seen out here by a long shot. Let's see what our last one has in store for us. Going on out to the other name everybody loves to check every day. Of course, I'm talking PAH. PAH. If you're wondering what this is Platform Specialty Products Corporation. They make chemical products. And let's see, they're trading right now 11.06, up 16 cents on the day. This is the name that's had. Let's look back a year and see what's been up in good old PAH. A year ago, they were about almost, not quite a buck, 3/4 of a buck, 11.75. Trading about a year ago. Then they had a bit of a rocky Q1. They got down to 9.83 or so in early February. I wonder what happened in early February. Then they kind of rallied back and then soared right back off again in April to that same level, right around 9.30. Then they kind of began a nice upward trajectory for the next 6 or so months. Got up to about 13.40 or so north of the 13 handle. So quite a rally there, about 4 handles or so. And then it immediately turned right back down again to the dark side. Got down to about 10.60 again in the span of the next couple of months and sold off again down to 9.31 again. So all that they gained, they lost. So it's kind of been a bit of a wasted year net for PAH. Actually, starting the year, they're down. They started the year 11.75 last year. So now they're back right in spitting distance of where they started the year off again, kind of the middle of that 52-week range. Let's see what the options were lighting it up out here today. We saw the Feb 10 puts. So seeing some Feb puts lighting it up 8,124 times for a quarter. These things were a dime bid at a quarter coming out. They lifted the offer for all 8,124 of these. These are opening. It is worth noting. Also worth noting, there is earnings. Earnings are on the 27th of February. So that's going to be outside of that expiration cycle there. And looking at, the earnings on the 27th. So 8,124 Feb 10 puts opening for 25 cents. Lifting the offer. Mr. Rock Lobster, bit of a aggressive near-term put love here in PAH. Maybe someone feeling a little bit of spookage. They were, after all, trading 9.31 not too long ago. So maybe he's deciding that he wants to stop himself out pretty much at 9.75, not too far north of where that low is. What's your thought on these apparently near-term panicky puts?
I'm just looking at this one, and it does feel like it certainly was an expensive put purchase. You know what I mean?
Yeah, they had to want this one.
I mean, that definitely not cheap. There is some volume out there. It doesn't trade very much, but there's some open interest around the strike. There's 16,000 calls open. So this is a weird one. Rarely do you see somebody buy puts like this and just buy them flat out. It's usually against like a stock position or something. I don't see time in sales. I can look at PAH right now. Maybe we can come up with something. But it has that feeling. But man, there's an awful lot of open interest in that bad boy. For a stock that really doesn't have much going on, there's 20,000 contracts at the 10 line. So it looks like somebody is looking for kind of maybe a bad earnings surprise. We just saw our next cycle is February. It definitely because they're not even catching the earnings cycle. What I think is the next earnings.
Yeah, the earnings are after it. They're on the 27th of February.
Yeah,
so this is not even getting. I could see maybe if it got them an earnings cycle why they're paying up and why it's so rich. But they just lifted the offer on fairly meaty puts with no working, no nothing.
Yeah, so I'm. This one is either they know something or they want to be stopped out at the year lows. They're expecting something bad. Maybe the tariffs hurt this company. I guess they're a kind of an industrial type company. So really, I would say a really odd. I'm just going to call it an odd purchase.
Well, it is the odd block after all, but you're right. This one has all sorts of weirdness. I'm going to call them panicky puts because I think that pretty much summarizes it. They're paying up. They're getting near. They're not even going out very long. It's going out next cycle all the way, lifting the offer, opening. Interesting stuff here. Pay attention to POM. We're not saying, of course, they're going to sell off, but someone clearly has a vested interest on the downside here, and maybe a little bit of a concern there. Worth noting. And again, maybe if you're interested in trading such things, these types of bids and these types of big plays and all the OI out there, that could cause some distortions in the skew that you could take advantage of if you are indeed so inclined. As we keep on rolling, let's see what Uncle Mike's got in store. But it's been a week, so we're all kind of starved for some strategery. So let's get into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Thursday. It's time to talk some strategy. Who better to do that with than Uncle Mike? And Uncle Mike, we were just talking in our odd block a few minutes ago. I'm not sure if you caught it or if you kind of take a nap during that segment, but I'm just kidding. I know you pay attention. But we were talking some fairly deep in the money, what appears to be kind of stock replacement, but on a cheapy name, on a sub $2 name, which is a bit weird, which kind of got me in the mood to talk maybe a little bit of stock replacement. So what do you got for me in that category, sir?
Well, let me a couple things, because right now it's kind of an interesting time in our marketplace. Of course, the market is down from its peaks that we had a few months ago. And so people are often having a concern with putting a good chunk of money into the marketplace. So what are some things with which you can do to kind of still get the upside of the stock, but still have some type of or have much less risk in the marketplace? Well, ultimately, the answer for that question is always going to come down to call options in one way, shape, or form. What would be one of the more efficient ways of doing replacement? Well, ultimately, the simple way of doing it is, let's say that you are a brand new option trader, but you're a veteran stock trader, and you love the thought of trading stocks short term, and you like the idea of having the leverage with options, but the time decay just really irks you. It does not compute, so to speak, when you're looking at it. Well, I think the first step of where you might want to go with that is something along the lines of a deep call. If you want to keep it very by a 98 delta call option, and you'll have pretty much the same movement as the stock. And the only disadvantage, of course, is that you have, with that, you will have typically a wider bid-ask spread when doing so. The advantage of buying a call option over a stock, if it is, say, a 98, 99 delta call option, you'll have almost all the upside of the stock, and the downside is limited to what you paid for the option. So that's probably the simplest way of looking at stock replacement. Now, let's take it to the next level a little bit. What if buying that 98 to 99 delta call option just isn't for you? Number one, maybe it's too expensive for you. It's still, you're better off than the stock in terms of the risk, because if the stock goes to zero, you lose all the money you put in the stock, whereas if you just have the call option in place, you just lose what money's in the option. But you really don't think it's quite as nice of a bang for your buck for two reasons. Reason number one is the wide bid-ask spread. Reason number two would be, okay, for a lot less money, I can maybe buy an 80 delta call option. And with that being said, I could perhaps instead of buying, let's say, maybe 3 of the 99 delta calls, I could buy maybe, I would say, a greater amount of the 80 delta calls, or set up whatever ratio with which you'd like. Now, the disadvantage of that, of course, is that there's going to be time decay factored in. You're going to have to understand what time decay is about. You're going to have to understand what volatility risk is all about. You're going to have to understand a lot of those things. Now, if you have a good options education and you feel that you can manage that risk well, then by all means, that could be a more efficient way of doing it. However, it depends on the individual goal of what you're trying to do. Now, the final way that I'd like to talk about for a stock replacement style of strategy would be to buy an option either in or at the money for that matter, and perhaps sell a call against the call you bought. Now, this could be done as a vertical spread. This could be done as a diagonal spread, meaning that the expirations could be the same on the option with which you're buying and selling, or they could be different depending on what your gauge is on volatility. Ultimately, what I think makes the most sense when trying to go that route is to look at your position delta or look at your position Greeks, meaning what is your ultimate delta today with that spread? Because sometimes people will buy a spread and think, oh, well, okay, I have this spread in place, and that means if this goes from here to here, then I've made my max profit. Well, not necessarily. That short option can put quite the monkey wrench in your plans if that's what you're looking to do with it. So that's another thing with which you need to take into consideration. Now, I think that all three of those have a place if you're looking for some type of stock replacement in some way, shape, or form, or a mix of them depending on what you're trying to do with the strategy. So kind of ponder on them, see which one might work best for your specific situation, and make that trade if it makes sense for you, of course. And that is the strategy block for today.
Thank you, Uncle Mike. It is Thursday. Let's keep on rolling into a Thursday edition of the Mail Block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block, the portion of the show where you guys take the reins, questions, comments, insights, pearls of wisdom, nuggets, dirty jokes like in our chat room, which we won't repeat. Actually, not dirty, but you have to read them for yourself. I can't read them on air, listeners. You got to get in the live chat if you want to see all the ribald humor that is going on out there. Instead, let's keep on rolling. We ask you guys questions as well. We've got last week we asked you about looking ahead to February expiration. A lot of those names have been beaten down. A lot of the big names out there have been beaten down. If you had to take a flyer, buy a 5% out of the money call on one of these four names, which one would it be? Gave you four choices: VIX, Apple, Amazon, or SPY. With the votes in, it was a little more than a third, 34% saying Amazon. You wanted your love for Amazon. Number 2 was VIX. Number 3 was SPY. 2 was VIX, 24%. Number 3 was SPY, hot on its heels at 23%. And number 4, Apple. Again, kind of showing Apple not feeling the love. Only 19% of you feeling the love for Apple out there. So maybe that worm has turned a little bit on Apple. Certainly with our audience, on Uncle Mike, maybe his innovation index is getting to you guys. Either way, not a lot of love for Apple in a lot of our recent polls out there, which is a marked change from a year or two ago. Let's see here. Let's did some quick numbers here while Uncle Mike was talking in terms of how these have performed. Obviously, we're not through February expiration, so we don't know the winner. But just in the near term, since they were posted about a week ago, looking at how these names have all performed, Amazon, the winner of our poll, is actually down the most. It's down 2.25% since then. So in the near term, at least, Amazon is actually the biggest loser. Apple is down about 1.25% since that poll was posted. SPY up 1%. So that's the probably real winner. And then I'm going to quote a percent, so cover your ears if it offends you guys out there. This one is the most dubious. This is why I kind of take it with a grain of salt. But pure percentage-wise, which we all know is a nonsense number, percentage-wise on the VIX cash up 4%. At one point, it was up nearly 14% in that intervening period over two handles. So, of course, we've all talked many times about how the real number, of course, that matters for the call buyers is the futures, and the futures have kind of been locked to that flat structure. So the futures haven't really performed there, which is why that number is kind of nonsense. But still, it's fun to throw out there just to get people mad, if for no other reason. So in the near term, purely percentage-wise, nothing else mattering, VIX is the winner. But we all know that's a lie. So we'll see how that performs. We've got till Feb expiration. So we'll see which of those is the real winner. This week, we're asking something different, a little very straightforward question. When I was doing that poll last week with that panel, a lot of industry people, we were talking about industry volume records and things like that. So I put it to them, the industry crowd. I said, we set a record this past year, 2018, 5.1 billion contracts. close to 1 billion contracts more than 2017's volume, so a record by pretty much any stretch of the imagination. Prior to that, for the better part of a decade, the industry had kind of been plateaued around that 4.2 billion contract level for the better part, at least since like 2007 till about last year. It was really locked in that 4.2 or so billion contract range, and we broke out of it with gusto last year. So my question to the industry crowd, and I extended it to everybody in our audience this week as well, is, are we going to break that this year? Can we beat 5.1 billion contracts for 2018? Very simple question, yes or no. So I will put it to you guys as well, give you guys a chance to play as well, starting with the Rock Lobster. Do you think we can do it, Mr. Rock Lobster? Will 2019 beat the record year of 2018 with 5.1 billion contracts, or was that kind of an anomaly and we're going back down, sir?
2018, I mean, think about what happened. We had 2 major vol spikes. The only way 2019 will beat 2018 is if we jump into a raging bull market. So I'm going to say, as of right now, the end of the year always looks different than the beginning of the year, but I don't see us beating that volume.
Interesting. Uncle Mike, you're usually a resident optimist. Do you think we're beating it, or are we going back down, sir?
It is going to beat it. This is going to be the year that we have vol spikes and market spikes. It's going to be crazy stuff going on. 5.6 billion. You heard it here first.
Whoa. Well, I'm going to have to put that down. I'm going to have to put that down so you are officially on record, sir. Uncle Mike, 5.6, you said?
Yeah, let's go for it.
We should
you know what? 5.5, 5.5.
Oh, not too bad. Too bad. I got you at 5.6. It's typed in. It's set in the proverbial ink now. It cannot possibly be changed unless I hit this delete button, and I will not. So you are stuck there. But yeah, maybe that's a good game we could do too on the network. Because if you had everybody guess VIX, maybe we'll guess some volume for this year. But it's interesting, Mr. Rock Lobster. You're on the pessimistic beat. I kind of feel where you're coming from, Uncle Mike. Optimistic as usual. The industry crowd last week, when I polled the audience, was extremely optimistic. They all thought, almost to a person there, that we were going to beat the numbers. Our audience is feeling the same way. The poll just kind of went live, so it's got a few more days to really bake. But in the early voting, it's about 75% saying yes, 25% only saying no. I have some thoughts on this, but I don't want to weigh in early in the poll because I don't like to color it. I'll wait a little bit, but I have some thoughts on this as well. Spoiler alert: I may be leaning towards the Rock Lobsters. Just maybe. I don't want to be a pessimist though, because good industry, good volume is good for everybody. And I hope I'm wrong. I hope Uncle Mike is right. I hope we blow the doors off of it. But that's going to take some heavy lifting. Let's see what else we got going. We did something a little bit different here today. We went out. We don't ever really do this, but we went and checked just for fun out to the different platforms that our shows are available on. They are available on many. We are legion, as they say. You pick a platform, your iTunes, the newly launched Google Podcast, the aforementioned Google Play, Stitcher, TuneIn, wherever you want to go. The app stores, we're in all those as well. We're everywhere. Can we never really talk about them? We never say, hey, go give us reviews in those platforms. But, if you like what you're listening to, head on over there and make a review on whatever platform you listen to. Could be iTunes, could be Google Podcasts, whatever you like. Could be the App Store if you're using the app. We went and just kind of pulled a few of them. Again, we don't use these for questions, so don't ask us a direct question there because we quite literally almost never check these, so some of these are old. But so you have a question, you know how to get us for a more timely thing. But we're just looking to see what people are thinking. And iTunes here's a 5-star review from RX Edward. Maybe he's a doctor, maybe a pharmacist. He says, we're a must listen to. Well, thank you, Mr. RX Edward. Right back at you. Clearly a man of discerning tastes. Got another 5-star review here from Baja Saki. He's also saying he loves the show. Very informative. Looking forward to more fresh insight every episode. Well, right back at you as well, Bajasaki. Here's only 4-star. We got 4 stars, dragging us down from Lurley. And you know why, Mr. Rock Lobster? It's your freaking counterpart there, the meatball that's getting us this. This Lurley says he likes the stuff, but he says there's a need for a comedy show about business that doesn't alienate people with lady parts or old dudes. So clearly he's referring to your counterpart, the meatball's short-lived business show. That's my fault for letting him do this on this network, sir, because look what happens. He drags down our review scores as a result. So freaking meatball and his improv business show giving us 4 stars. Curse you. Let's see if we can get an uptick here. All right, we got a 5-star here review. Now we're down to like 4.5 on iTunes because of him. Freaking meatball. 5-star review here from Prink. Prink says, listening gives tremendous insight into options trading, strategies, and trends. Great team that combines risk management, speculation, and investment wisdom. Wow. You guys feeling the love here from the iTunes audience? They're loving you guys.
Wow. I feel it is kind of nice. I feel really good.
Oh, here we got a dark side here one as well. This one must be old. This is probably from a couple of years ago. Again, this shows how long it's been since we've checked in on these. We got a 1 star. Uh-oh. This comes from Liv HK. You'll never guess why he's angry. He says, I'm a relatively new listener. However, I had to turn off the show after 5 minutes. I am here to learn about option strategies, not to listen to Apple-hating rhetoric. So clearly, again, the meatball getting us in trouble out there. This is back in the days, I think, when Apple was hot and heavy, and Meatball, and to myself to a lesser degree, I blame mostly the Meatball, we're just slamming Apple left and right. Clearly, this guy didn't like it and felt compelled to go to iTunes to express his view. He says, I get it, you don't like Apple's platform, but at least show you are not ignorant of Apple's products if you decide to talk about it. All iPad Macs require a wire plugging into iTunes. Hello, have you heard of wireless syncing? iCloud sync for documents, etc. He goes on for a while. I'd love to hear your analysis on valuation. Like I said, this has led me to seriously doubt the quality of the content on the main topic. Okay, so there you go. We've officially alienated Apple zealots out there. Again, the meatball giving us all these low. You got to pass this along to him, Mr. Rock Lobster. The meatball is killing our review scores, at least on iTunes here. As a result, I'm sure there's some probably. If I dig a little deeper, I'm sure there's probably some Tesla people who are mad in there somewhere as well. Oh, here's another. Let's end it positively. Another 5-star review from Punt, Pass, and Shoot, saying there are a lot of financial podcasts out there, not a lot of good ones, although. It's even harder to find something useful about options. The option block really gets it right. Just the right amount of information, banter, and market insight to make it something I look forward to listening to every week. Great energy between the guys, interesting guests, and useful to traders of all ranges. If you're thinking about subscribing, stop thinking, just do it. Well, I love this person. Punt, Pass, Shoot, hit us up. We'll send you a T-shirt or something. Clearly, another person of very discerning taste. Well, what do you think, guys? All this love coming in for the network and indeed for the shows. This is just one platform. We never look at these. We probably should. We just never do. So we're too busy with all the other immediate and pressing feedback. Are you guys feeling the love?
I am. I mean, this show, it's an honor to be on this show. And this is very few people are blessed to where they can enjoy and look forward to going to work every day. And this show is something that it's always a fun show to do. And it's an honor to do it. So very honored and humbled by those reviews.
There you go. We haven't even gotten into all the other platforms, the Googles and the TuneIns and the app reviews and everything else. Maybe we'll dig in some of those. So moral of the story, if you're listening, you like what you're listening to, we don't charge anything. Pretty much never have. So if you've been listening for a while, head on over to the platform of choice, could be whichever one, and give a review. Give her your heart. We won't solicit 5-star reviews. Whatever your heart feels like. If you hate the meatball like these other guys, then go for it. If you like what you're listening to, then put it in there on your platform of choice. It's always fun to see what people are thinking out there, if nothing else. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, around the block, we're looking at some stuff. There's longer-term stuff, and then there's some very near-term stuff. Near and dear to a lot of people's hearts is, of course, as I mentioned earlier at the top of the show, after the bell, we got some big names popping off, including Intel. We've got Starbucks. We've got E-Trade. We've got Discover. We've got a bunch of names coming off after the Western Digital for all you hard drive aficionados out there. So a lot of names to watch. We are in the heat of it. We are in the thick of it. Earnings season once again. It is nice, Uncle Mike and the Rock Lobster, it is nice to have at least some momentary distraction from the government shutdown, the will they, won't they dance, that is the trade war, that is European rate policy, that is Brexit, that is all this other nonsense. So we kind of get bogged down in all the time. It's nice to just say, here's company X, will they make their numbers, will they not, yes or no. It's a nice kind of binary system, nice kind of binary event. I kind of find it refreshing. I don't know about you guys. Uncle Mike, sir, are you watching earnings? What are you watching for till Monday when we gather together again?
You know, I hate to say it, but I mean, I'm watching the macro things at this point. I mean, yes, earnings are very important.
That's it. You're out. I'm muting you right now.
I wish I could mute me for saying such a thing, but unfortunately, that is a big part of it. But I agree. It is nice to actually look to see if companies are making money, to analyze whether or not they're trying to sandbag, to analyze whether or not they're trying to hold things off. So it's a good, refreshing thing out to where we're not always just talking about, well, they won't then. What are these politicians going to do? It will be refreshing to do that, to say the least.
Mr. Rock Lobster, are you also watching all this macro nonsense, or are you zeroing in like a laser beam on some fun micro things, sir?
Well, the thing is, you can't really watch the macro nonsense because it might give you a headache. It might make your eyes cross. I think if we do get a trade war, shutdown, all this other kind of dopey stuff off the table, the underlying economics are good as long as the G7 can kind of get their act together a little bit. But earnings are good. I mean, stocks like Xilinx going up $14. These are all good things, and they're running up Intel into their earnings, so we'll see if they can make everybody happy. That's a stock that I own. It's one of my favorite holdings, mostly just because I think it's a cheap stock and it pays a good dividend. And it's hard to see where Intel's going. So I think the big bellwether companies, how they're making dough, is going to make a difference. I think ultimately, 6 months from now, it'll be the earnings. It won't be the trade war, and it won't be the shutdown. It'll be that kind of dollar. So I think there is opportunity here in many of these stocks, as long as the underlying economic fundamentals are still pretty good. So I'm looking at earnings, and so far, for the most part, they've been pretty good. Granted, everybody's been grumpy. So anyway, that's where we are.
And that music means we are unfortunately coming to an end of this epic sojourn through the world of options. We talked a bunch of earnings. We talked a whole bunch of strategery. We talked some crazy stock repairs on cheap names and on more expensive names as well. And we got a whole bunch of your iTunes and other platform love. So if you're liking the show on those platforms, make sure you express those sentiments. But before we go, let's go back around the horn. Let's go back the other way. Let's start with the Rock Lobster. Mr. Rock Lobster, sir, if people are intrigued by everything you're talking about here, they want to learn more, where should they go? What should they do?
Go to optionpit.com. We are going to do option trading for registered investment advisors and portfolio managers. Basically, how to use options in like longer term and for hedging equity positions. Or replacement for those positions. So it'll be a master class for an entire 10-week cycle, and it will really help you improve the performance of how you manage portfolios of stocks, or even just the SPY or anything like that. So it'll be a very nice class.
So some might say a master class. I like that. The master classes are back. That's good. I haven't said that in a while, so. It's fun. It gives me an excuse to say the masterclass. I like it.
2017.
Yes. Oh, it hasn't been that long. Wow. Since 2017. Mr. Uncle Mike, what sort of mastery can you offer our listeners? Maybe if they go click on the Fox, will they become masters of something?
Hey, if you guys are looking for a financial advisor who is not afraid of the word volatility, check out my website, stcharleswealth.com.
Check the man out, stcharleswealth.com. Click on the Fox for fabulous prizes. They're not there, but maybe someday they will be if I keep saying that. And on behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for leaving us such glowing reviews. Keep them coming. We'll see you next week for more of the Option Block, but stay tuned if you're listening live. We'll give you some fun stuff. You get a little taste of our newest program, our Crypto Rundown, coming at you in the interim. Then we'll be back in about exactly half an hour to talk all things futures options. So some equities, some indexes, some energy. You never know. It's going to be a listener question palooza, so it should be fun. Stay tuned for that in about half an hour. Otherwise, we'll see you next week for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.